This is the case of Digget Shovels, and as always, you can find the case attached to this video and also on Blackboard. So you should pause now, print it out, read it, and so we can better follow along. So I've actually replicated some of the data from the case in this video, and you can see that we have a beginning inventory of 130 units at $15 a piece. We had purchased another 50 units at $18 a piece. We had a sale of 70 units. All sales are at $40 a piece, so we sell at $40 per unit. And that's also true here when we have this second sale. It's at $40 per unit. We had another purchase of 100 units at $20 a piece, a third purchase at 35 units at $24 a piece, and we're actually contemplating making this fourth purchase in the year, and we're wondering how it might affect our financial statements. We're going to begin with making these two assumptions. We're using perpetual inventory under a FIFO system. So perpetual inventory system says whenever we have a sale, we have to calculate cost of goods sold, and we only do it with the inventory that we have on hand at that point in time. FIFO is telling us which units to sell, and FIFO is first in, first out, so we're always going to be selling the oldest units we have on hand. So let's look at sale number one here. Sale number one, we sold 70 units. And again, this was at $40 a piece, at $40 a piece. So I would have recorded an accounts receivable of $2,800 and sales of $2,800. And again, since it's perpetual, I know I have to record my cost of goods sold and my inventory. The question is, at what cost? Well, I'm going to look to the oldest units I have on my books, and I want 70 of them. So I can look to my beginning inventory, and I have 130 units, and I have enough to cover that. So I'm going to sell 70 of these 130 units, and that will leave me with 60 units left in there. So I'm going to sell 70 units at $15 a piece because they're coming from this layer right here. Okay, and I believe that is 1,050, and so that's how much is going to come out of inventory. Okay, so that's sale number one. In sale number two, let's put it right here. Sale number two happens a little while later. We've actually had some additional purchases of inventory. We're going to sell 80 units at $40 a piece. So we're going to, again, record the accounts receivable, and I believe that amount is $3,200, and that will be sales of $3,200. And now, again, we're going to, because it's perpetual, we need to calculate our cost of goods sold and our inventory. The question is which units are we going to sell? We're selling 80 units. So if I look to the oldest, well, I only have 60 units at $15 a piece. So I'm going to sell 60 units at $15 a piece, and I believe that is 900. And so these units now are gone. I then need another 20 units. So there's only going to be 30 units left here. So I need another 20 units, and I'm going to pull them out of the purchase number one layer. So that is 360. So my total then is 1260. So the cost of goods sold is 1260, and the amount that inventory gets credited by is 1260. Okay, so those are my journal entries for the two sales transactions. Let's follow up with a couple things here. First of all, let's record what our total sales are going to be. Let's do a little income statement. So my total sales are going to be $6,000, and again, that's the $3,200 plus the $2,800. My cost of goods sold is going to be the $1,050 plus the $1,260, which is $2,310. And that's going to give me a gross profit after both these sales of $3,300 and 3690. I'm still wrong here. 3690. Sorry about that. And that's my gross profit. Okay. The other thing I want to know is how much do I have in inventory at this point? And please consider that we're still not considering this purchase number 4. So what I have in inventory, well, I have 30 units at $18 a piece for $540. I have another 100 units at $20 a piece for $2,000. And finally, I have this purchase number 3. I have 35 units at $30, at $24 a piece. And so that gives me another 840. So at this point, my total amount in inventory is $3,380. Okay? And this is all without number 4. Now, if I had included number 4 in all these computations, how would that change? Well, it wouldn't change my sales number. My sales would remain the same, and that's going to be true in all of these computations. It's not going to affect the sales number. How does purchase number 4 affect my costs of goods sold? Well, if you can follow the logic here, whenever I have a sale, I'm always looking back, and I'm always looking back at the top. Well, this purchase number 4 would not have affected my costs of goods sold at all under this system. So my gross profit would still be the $36.90. What would happen, though, is that this additional purchase of inventory, and we purchased 60 units at $30 a piece, which is another $1,800. So all of this inventory would now go into, all this additional cost would go right into inventory. And I believe that's $5,180. So the additional purchases does not affect our income statement. It all goes on the balance sheet. Now, before I finish, I want to do one last thing. I want to take this data and put it in a table so that we can follow all of this through all the different computations we're going to do. So I'm going to go to this table number 5, which I've already set up here. And you can see I have labeled across the top perpetual and periodic. And with under each of those, I have LIFO, FIFO, LIFO, and FIFO. So we just finished the perpetual FIFO. So I want to write down in these cells how much we had. So what was our cost of goods sold without the purchase of number 4? Well, that number is $23.10. But we also know the cost of goods sold actually didn't change even with number 4. So we're going to write that in as $23.10 also. Our gross profit under perpetual FIFO, with and without purchase number 4, did not change. And so that was $36.90. And the only thing that did change was our inventory balance. So our inventory balance without number 4 was $3,380. And with number 4, it was $5,180. All right. So in the next video, then we will look at perpetual FIFO.